Good weekend, all. Ira Epstein with your weekend review of your financial markets, and this is in the futures markets, for the weekend of May 8th, 2021. Saturday is when I'm putting this out. So in looking at the market, the big event on Friday, of course, was the miss in the jobs data of only 266,000 jobs gained. Now, the market had been looking for 1 million. That was the common number being thrown around. Just prior to that, I was watching CNBC as they had on 6 analysts. They were at 1 million, 1.2 million, up to 1.5 million. Very robust, looking for the big crease where the market gets over that number, and it didn't get it. Now, the initial reaction by the markets you would think would have been bearish the stock market. Not so. I certainly would have got that wrong. I would have thought, oh boy, the market's going, oh, things are not good at all. Actually, the market took it as things are just perfect. And by that, here's what I mean. Interest rates are not going to go up. I'm not worried what the 30-year bond does. And if you look at it, how it swung around, it rallied at first. It got that wrong. And then it dropped nearly 2.5 points from there. So the rates were all over the board. The 10-year held, but look at its range. You were certainly within almost a full basis point of that. You know, that's a $1,000 move on the futures. That's a heck of a move that we saw. And why? Well, the market now views it that the Fed had said just this week that they needed more of the same data to keep coming in. They didn't get it. It wasn't sustained. In fact, if anything, the March jobs data went backwards a couple of 100,000 jobs. This missed by 700,000 jobs, what the market thought. And what that means is those bets that the Fed has got the ammunition right now to go out and raise rates sooner rather than later got at the best delayed and maybe at the worst put back even further back for those making the bet that would happen. Okay, that's what you're dealing with in the market. The dollar got smashed on it. If you take a look at the gold market, it took off. Silver went nowhere. The copper roared. Is copper ahead of itself? It is. If you'll recall, I said that the first next level, 460, then the 475 level. I'm getting these numbers from some of our services called price counts, just so you can know. I do the work on that. We'll talk about that next week. Let's go, though, and look at where we're at. If you take a look at the E-mini S&P, another new record high. Boy, this is a tiring story, up another 50 points on a monthly basis. Now, we're only at May 8th, so the month isn't over. Last month, the market did close, as you can see here, up 5.25%, and we're exceeding that right now as the month is going on. On a weekly basis, we gained another 1.22% to an all-time high weekly close of 42.25 When we take a look at the bar chart, you can see you have an outside week up. Now, my rule on an outside week is pretty simple. When you have an outside week up, what I don't want to see taken out is the low of that week within the next 2 weeks. If it is, I look for the market to then fall to the closest moving average or Bollinger Band, the closest of it under the market. The 18-day average, that's pretty far away, as you can see, at 39.54, and the resistance is the upper Bollinger Band at 42.6195, which brings me back to that statement. If this is taken out, could be setting up a move back to the 39.54 level. If it's not taken out, the resistance is 42, let's call it 42.62 to just round everything. And momentum is still embedded. Long term, it is bullish. I think the pros are going to be buying this market with stops under this low, continuing to look for higher highs. If that low is taken out, what would flip-flop me? To say, hey, my analysis was wrong, the market might go up even further. That would be taking out this high, or whatever the high is first within the next 2 weeks of not taking out that low. So you got to keep your eye on that for the next 2 weeks. That's how I view the market. In the Dow, I'll start at the bottom. You have the embedded reading. That tells me that the pros are still buying the market. You have the clean pattern of higher lows, higher highs. For those of you that have been taking my enhanced Bollinger Band course, this is your setup. They're right here staring you in the face. So if you took the course, you have to have the smile You got to be smiling because it's doing what you'd expect out of that particular course. Again, we did not have an outside day in this market, a complete different setup. In the Russell, we didn't have an outside week. I said day, outside week. What this market did is it came down, filled up, came back to that line in the sand that I call it, that 18-week average. Unlike the other markets, you don't have the embedded reading. So it is still the strength sitting here in the Dow with the embedded reading, not the NASDAQ, but the S&P. Got that? So that's what you're dealing with. You're dealing with two markets, that the NASDAQ and the Russell, that aren't as strong as the other two. If the market rallies up sharply, 2363.26 is the important number, and not taking out 2164.60 is the number you don't want to see if you're going to maintain this bullishness of higher lows, higher highs. As the market has been falling down, it is still in overbought territory. Any reading in the slow stochastics that are over 70 and not embedded, meaning they're not going sideways over 80, is an overbought area. How you want to treat it, that's up to you. I know how I treat it and what I teach in charting. In the bonds, so what we had done is back here, right there, this week we had lost, and that's the week of April 23rd, we had lost the bearish embedded reading. When that occurs, you normally make a run to the 18-day average of closes or the closest average under it. Here's the market making its run. It's not necessarily over. I don't know what it's going to do here. That is the resistance number. It'll drop when we reopen Sunday night. It's going to drop probably 5 points or more. As you can see, this was 162.4. That's 161.9. That's almost a full point. So it's going to drop down pretty far. I said a couple points. It's more than that. It's almost a full point. So when I'm looking at that, it won't be hard to hit it if that's what it's going to do. It has lost its embedded reading, so it's oversold. When a market is embedded, the first stage it goes to, then as it comes out of that, if it's bearish embedded, is oversold. Then to get out of that, the numbers have to come out of the 70 level, okay? Flip-flop it the other way. When you're, I gave you the wrong setup. That was the bullish setup. When your bearish setup's there, you come from under 20 and you have to get the numbers oversold, which means they're now over 20, and they have to get both of them away from that into the 30s. Does that make sense? I know I said it wrong, but I'm not going to redo it. My traders know what I'm saying. 10-year notes, the same thing. So you've lost the embedded reading. You started losing, watch it, didn't lose it here, not there. You lost it just now. Now to regain it when you just lose it is you can regain it the next week if both numbers go back under the 20 level. If they don't, you're in that process where the odds favor the market making a run to the closest main moving average, in this case the 18 in the red. In the dollar index, I think the pros are going to be all over this market on rallies. Unless you take out this week's high, because it's an outside week down, until it's taken out, I look for the bears to be aggressive in this market, trying to press her back down into these levels. In the eurocurrency, it's the flip-flop until you take out this week's low. I think the bulls have all kinds of reasons now. They're going to see higher highs, higher lows. The support at the 18-day average, the dollar, the resistance at the 18-day average. I think these markets are going to be locked in until that's taken out, with the potential here of back to the 122.85 level. In the Canadian dollar, no trend, overbought, over the upper Bollinger Band 2 weeks in a row. Too stretched out for my techniques, the way that I teach trading. I realize it's a new high. There's nothing on here that's been bearish. I don't think I've said be bearish in this market. November was the last time it even got under an 18. Has it had buy opportunities? It has, but not when you're over the upper Bollinger Band. In the Japanese yen, the market has now seen a bearish crossover. The 18-week average got under the 100-week. Take a look. Watch how the 18 in red, it's just getting there, and that's it. That normally leads to lower areas here. It also tells me, because you're not trending, you have a lower and low, higher high, then any rallies up there should be loaded with resistance against the market. In Bitcoin, you're not trending. You've kept the upside bias. You can see that. You haven't been under this 18-week average since what? I guess August, September of last year. So it's kept you in the buy mode, but that doesn't mean that it's continually to the upside. It just means there are times when the market is stepping out. That's what I think we did here. You lost the embedded reading. When you do so, you often make a run to the 18-week average. You don't have to hit it, you have to make a run to it, and that's exactly what it did. For good measure, it hit it the week after, and you're just sort of hanging right here now. When I come to the differential between Brent and WTI, now an event happened on Friday that we have to look at all weekend. The Colonial Pipeline has been sabotaged. Software came in and they're unable to open it where the East Coast, I guess it's Jersey, that whole Atlantic East Coast area up there, they're not going to be able to get the gasoline and other parts that they need flowing through that pipeline. It's important. So keep your eye on this. This could drive up prices very quickly for Sunday night. You want to see how that reacts to it, but read the newspapers about it. You can see what it's done. You've come back to the differential of just sort of hanging here on a weekly basis, and it's been doing that. The market has been in an uptrend, but it's overbought, higher lows, higher highs. You know, if that ransom takes place, what does it do? If the ransom's not paid and they can't free up to get the software to operate, well, the products go up and the price for the Brent's normally bearish. Why do the refineries need it when they can't do anything with it? Got what I'm saying? So they're not bidding on that through those pipelines, but what they've got is worth more money because they got to ration out distillates and gasoline. That's normally how these things play out. WTI, you can see how the market is coming up. It is in the overbought area. It's in an uptrend. It's had its day in the sun when it got up here. Now we have to see what this new little wrinkle does. I say little. It could be a lot more than little. Gasoline, next target, if it takes off from this level up here. Now, is the market embedded? The answer is no. Both numbers are over 80 this week. They were over last week, and the week before, they were not. So could they embed this week? Yeah, it takes 3 weeks to embed. Be interesting. But I think the bulls have their target up there right now via this new piece of input. So when you start looking at all this, you get a game plan. And one of the things that I think is most important to your game plan, yours, is what I do early in the morning when I start off at 5:40 recording. I could start recording at 5 if I felt like it. I'm up by 4. I'm reading like mad. I'm really ready to go with these updates then. But I keep reading, and then I read the Chicago newspapers. I've got time to do all that. I talk shorter term swing trades and longer term trades. So I don't want to hear you don't talk longer term trades. What do you think we're doing on this weekly chart? Remember that ad on TV? Is that how you hold the mirror? Well, what do you think I'm doing here? It's the same identical thing. That's where we come in with them on the weekend and during the week. I do update them during the week for you. You can view this through all 3 pieces of our software. We have our QT platforms. So we give you a piece of software that works both on Apple and Android. You get your quotes, you get my news, it flows through there. You can see my videos. It gives you push notification and text notification. So you can get both. You can stop the text whenever you want. I like you to get it on time, so that's why I do it that way. I cover each morning about 20 minutes in discussion with you. I'm going to give you the news as it's come out of Asia, Europe, what the U.S. is looking for in its reports. I review everything in this order, and if you go to our website, on our website there's a pull bar on the bottom, and it lights up big. I'm in interest rates, you're in metals, or you can scroll down. I just want to see, hey, I want to know what the energies are doing. Where does Ira start? Right there. We get words from people, they love it because they can get right where they want, when they want. Each video is about 20 minutes long. I just went on before I did this, and I wanted to see what Starbucks, I love their products. I don't have them every day. In fact, I don't have them more than once, twice a month because of the cost. It's $4.65 for a large cappuccino. Okay, that's what I like to drink. Then by the time I give a tip, I'm $5.50, right? For one. For 30 days, you start off with my product. Let's assume you had 2 cappuccinos a week. You've covered more than your cost even on the other part of it. You're just about there. I'm putting out 24 videos for you a month, 5 during the week, 1 on the weekend, each 20 minutes long with specific buy here, sell there, do that. Now, if that's too much money for you, sorry about it. Then just keep watching the freebies, but don't complain when I don't cover all the things you want, and I sometimes skip them every now and then. That's just what I do. In the meantime, I'm Ira Epstein. Give us a call. Go to our website, www.iraepstein.com. Go to the Ira Epstein Morning Futures video. You'll see it under Research. Sign up there. Take care.